Good morning, Ken Long from Tortoise Capital with the review of the weekend trading report for March 19th, 2016. We have a market that is in bullish normal on the daily. I like to keep it one more week in sideways normal until we finish the week out of the sideways condition to keep us from jockeying back and forth between those two conditions. But this is certainly a favorable development. On an annual basis, using weekly RSI 14, we've improved to 57 out of 100, slightly higher in neutral. The 10-day NDX for shorter-term market condition is overbought at 95 out of 100. Looking at the market mosaic, price with respect to the 200-day moving average has moved to white bullish at 2.40%, so we're 0.4 into the bull. Slope of the 50 turned positive to white bullish at 0.23. ADX improved slightly to 17.8. Still neutral in terms of strength of trend, but favorable towards the bulls. The risk index is the 30-period moving average of the VIX divided by the 10. The threshold between risk on and risk off is 1.0. Current reading has improved to 1.208 for risk on. We take that score, compare it to the last 5,000 trading days, which gives us the risk Z, which is 2.33. So 2.33 standard deviations above the long-term average. You can see a 90-day histogram of that reading right here. We've moved from a -2 to a little over +2 in the last 40 days for that reading. So still favorable on the long side. And with the extra boost of getting through the 200, let's see if there may be another leg up. The last time we were favorable, this went up to +3 on the upside. So there's still some room for continued gains. This is the blended monthly rebalancing the current holdings. Next reevaluation is due on or about 1 April. You can see the leading contenders on the basis of Friday's closing prices, with Latin America, Australia, Asia less Japan now in the catbird seat here and for ETF 13. The catbird seat is a reference for our global clients to short stories by Robert Benchley from back in the 50s. So, just so you know. In ETF2, the theoretical exposure is improved to 90%. The model portfolio will be at 90%. We're adding a position in Brazil. In the ETF 13, everything with the exception of Japan is now on a buy signal above their 4-month moving average, with the leaders, as you can see, U.S. real estate holding up well still. And then in the ETF 32, excuse me, come on, mouse. You see Brazil, Latin America, emerging Europe near the top. Some of the defensive plays like utilities and gold still turning in good performances, but you can see the magnitude of the rebound in Brazil here in the last month. This one is odd to me that healthcare is still suffering. That may just be a reflection of U.S. politics and the fact that they've been so good from 2 or 3 years ago. But I'm looking for deep value plays to start emerging in leadership positions there. In ETF Max, gold still running to the top. Silver has been doing well. So metals and mining, therefore, has also been really excellent. I like that copper is coming along as a base metal and as a front runner to economic activity. Indonesia has started to lose some of the pace, but you'll notice that there's no negatives in this top 50 here, and that's just a sign that the momentum is lasting more than a week now, in previous months, we've seen that oscillate from green to red among the leaders. And so this is starting to shape into a longer-term trend starting to develop. In the S&P 500, Newmont Mining, as you would expect, our old reliable win is still performing really well. Freeport Moran, looking really good. In the metals sector, Range Resources also. Columbia Pipeline, another nice performance. In the market health check, the vertical blue lines are 10, 20, and 30 days worth of look back. Here's the 60-day look back. You can see just how different the previous 30 and the current 30 have been. This last 30 has completely erased the losses of the first 30. The horizontal red lines are support levels that used to be resistance levels, which have been defeated on the way up. They act as price targets on the way down should price begin to collapse from out of the floodplain into the river past the Bollinger Band mean and onward. The red shaded area is the 200-day moving average region, and now we're 2.5% north of that. You can see the slope of the 30-period regression line where it bottomed, where it crossed the zero line, and where it turned positive, which we always take to be the health of the market. That current slope reading, come over to the left side index, is reading at 0.67. Anything north of 4.0 is statistically very strong. So 0.4 is the average plus 1 standard deviation demarcation. So anything better than 0.4 is very good. Anything worse than minus 0.22 is also, on the other side, is noticeably weak. So that's very favorable. That's almost as steep as it got in the last 30, in the previous strong 30-day period months ago. So this is, as we come up towards this test at 210, which is the all-time swing high, there's no such thing as easy money, but if there is, it's been made. And now we'll see what happens as it gets up here to test this last little bit. This is like the Zeno stop developing here. So we're only a couple percentage points off the high. We've rebounded 12% off the low. So we're approaching a critical price target up here. We've achieved our first price target off of the bottom, and now the previous swing high is up next. The jaws of percent price oscillator are still open. The slope of the 30 regression channel is up. The slope of the 10 is up. All systems go. Nine of the 10 regions on the ETF2 world market model are on buy signals, which puts us at 90-10 invested versus cash in the theoretical allocation strategy, up from 80-20. The U.S. at 44 is still stronger than the globals at 40, so S&P better than the rest of the world. Inside the U.S., it's large caps, mid caps, then tech, then small caps. Latin America and Asia less Japan are the two strongest sectors. Two weakest are Japan and then U.S. small caps. Strength in utilities and staples and industrials inside the U.S. World market model. Everything value and then the large and the mid cap blends are above average. Growth and some of the small caps here still weak inside the U.S. Japan weak, but Asia less Japan strong. All of Europe lagging. Latin America and Brazil exceptionally strong, along with Indonesia, Thailand, Malaysia. The same insights from ETF2 as we got from the blended monthly rebalancing, with real remarkable strength here, metals and mining in Brazil. Green and then yellow is an indication of significant short-term turnaround from something that was very weak to something that is very strong. And you also see that here in the natural resources and in Latin America. Some strength coming out of consumer staples here, being white and green, so that's a sign of some weakness, along with the high dividend equity. That could simply be a rotation out of those conservative large caps and more towards some of the emerging markets and growth opportunities. That would play into this narrative of global recovery. Inside the Dow, Verizon continues to be strong. You see some strength here in Chevron, Caterpillar, and DuPont, as you would expect when the natural resources and energy are doing well. Meanwhile, Walmart and ExxonMobil still doing fine. Losing some strength here in Procter & Gamble, Coke, and GE, along with Johnson & Johnson and Microsoft showing weakness. Goldman Sachs still weak down here, and that's a rather sudden sell-off there, being red and green. Slight improvements here in Apple and Boeing. I'm really watching Apple. That's a must-own, obviously, and so if it can start turning the corner, we're catching it early in the turn here with yellow and red. Shifting to the daily, U.S. small caps on a overreaction short signal because of the strength in this market. I'm not taking that automatically. However, if the market were to roll over and retrace some of this very strong move that it's had, then U.S. small caps would be the first place that I go to exploit. You can see here how much volatility, as expressed by ATR percentage, has fallen out of the market. It's now almost into the quietude. You see strength of trend beginning to increase here with ADX, with bulls definitely in charge. A handful of overreaction shorts on the Dow, a couple dojis, and then one 551W in Merck. Everything is so near the top of its 10-day high, nothing tests out well in the auto framer. But lots of good quality frog numbers developing now. Many dojis in the ETFs. Again, a handful of overreaction shorts. 551W here in healthcare. And the VIX showing 4-1 on the auto framer. You can see the strength now in Brazil has really started to turn around. It's now favorable over a 6-month period. That's just how strong it's been. There's the auto framer in VIX. And then in the regression line fractal framework, these top shelf ones are the deep value plays and how many ATRs they are below their own long-term fair value. And in the red, the bottom shelf, the ones that are the most ATRs above their own RL270, you can see just in the size difference how this resurgence here in the past 30 days has now started to single out the leaders. 3M, Verizon, United Tech, Walmart, IBM. Whereas even the best deep value plays are near their RL270. That's more evidence of a potential turning point here. These are the daily squeezes. These are the symbols that are whose one-day range on Friday was less than 0.7 of their long-term range, and yet still offer better than 2-to-1 compared to their one-day range stat move, if you were to use a range risk from Friday's range. So that these are all poised for one-day pops in either direction. The slope of the regression line and the polynomial moving right along with it just says that this is a fair value and continuous momentum. The slope of the 30 is well above its 10-day moving average. It's at 2 sigma above the 6-month average here, the black line. You can see the price with respect to the 200-day moving average, how that's at a 3 sigma move off this double bottom, not unlike this move. And the last time it went into a period of sideways and decay, so Twice it's done that and then collapsed. So we'll see if this is looking like a heartbeat or if there's another leg up. And this is why I love that slope of the 30-period regression line. Gives us clear indications of turning points. We've just made a 4 sigma move from here to here. And so this is sort of a Zeno moment for the broad market. The upward slope is now as strong as the 2 previous moves of the last 10 years. That's how good that 30-day move has been in the market. And again, you can see how the volatility has decayed. And then this is just looking at this same chart here, but just looking at the last 200 days. So we're well over 2 sigma compared to the 10-year standard deviation. So we're going to watch to see if this rolls over and crosses its 10, then that's where we would put a stamp on this move and say, yep, that run is done. Just flipping through the stats for you to consult later if you like. This is the odd one to me. The healthcare has really been lagging big pharma. Slope of the 30, you can see how strong that has become. The 90 has definitely turned. The 10 is tested a couple times and still looking favorable. But again, we're in that same region where we've had failure before. Is this a channel or is this ready for a breakout? We exactly don't know, but we'll be prepared for either way. So in my view, this says preserve the gains you've made. Respect them. Enjoy them. Be prepared for breakouts. Be prepared for reversion. Be prepared for a period of sideways chop when all the things that were working here are no longer working and it's backing and filling. So I'm going to be tightening up my time frame once more and trying to catch some of those larger volatility moves which occur at turning points. And that's everything that I want to cover for this weekend report. Lots of things to choose from. Lots of asset allocation decisions to make and tightening up trailing stops and being ready to identify the next movers and shakers. I think it's shifted now to metals and mining, industrials. I'm looking for financials to make a recovery here. Looking for continued momentum in Brazil. And let's see how the week unfolds. This is Ken Long from Tortoise Capital. Keep your risk measured and your powder dry.